Good morning, traders. Today's focus is on dollar weakness and how Euro USD can extend its rally further up, especially after recent US reopening. Optimism was overshadowed just yesterday by hawkish Fed talk. Despite, of course, the boost from government headlines as the US government reopens, risk assets, stocks, crypto, and the dollar also sold off. Fed officials, including Musalem and Hammack, sounded more hawkish. Kashkari even openly questioned supporting further cuts in December. And that has dragged the rate cut odds for December back towards the 50-50 and undermine dollar support even more as near-term macro data starts softening and pushes traders into the euro. What else has happened with the US reopening? There is high chances that the NFP that is going to be reported is going to be half. What that means is that unemployment data are likely lost and are not going to be recovered. So on the chart, we see Euro USD remaining technically strong, especially after the bounce we saw yesterday at 115.70. At 115.78 is correct, with price firmly also above um, the support zone at 115.41 and also down at 114.68 following this sort of the short-term consolidation. So short-term resistance comes in at 116.69. You can call it 117 handle. This is a structural congestion level, and then you've got the 117.28. And finally, the major, pre-major 118.22, and of course, then the previous high at 119.70. Can we get there? It's not, of course, clear so far, but what we do know is that we are actively in the post harmonic butterfly environment, if that makes sense. That is a classic reversal pattern, of course, which has flagged the last bottom and hints at more upside, unless the US data or Fed suddenly flip dovish. So the RSI is rising currently, okay, actually falling, but on the 4 hour we're looking here, we don't see any signals of a slowdown as of yet, not a slowdown that would be worrisome, perhaps a consolidation move. So let me just quickly show you what this is all about. This is a butterfly pattern. So we have come all the way to 117.28, and these are the levels I'm using. And then we came and corrected around 78%, 78.9 down to point B. Then we extended around 60% of that leg in wave C. And then we came all the way down to this particular point, the bottom at 1.36, or within the guidelines of the butterfly. And then what happens is that we took first the initial starting point of X down at 115.41, which initially we saw resistance as well. Then we went and retested point B, then correction back to the point X, and then all the way up to break it, retest, false break, continuation to the upside, and next level now, what we are actually expecting is 116.69. Okay, and then of course above that 117.28. That will be the full completion, the full reversal completion of the actual territory of the harmonic pattern. Okay, and then above that, of course, we'll look at the other structures. 1776 can also become a level. What else I would go and do is that drop a Fibonacci from top to bottom and see if there are any clusters. And look at this, the 118.22, a very, very, very important level for us to take into consideration. Obviously, 38 and 50 also, 160.69 seems to be a midpoint. And currently we are seeing some sort of activity around the 38.2. So in my mind, if and when we take out the 38.2 and validate it as a support level, the next level to the upside above 117 116.69, we can call that 117, sorry, yeah, 116.70, let's say break, then we're going to see a move closer to the 117, right? So now, if we go a little bit further down on the 1 hour, this is where we see the RSI on the 1 hour seeing some sort of um, momentum exhaustion. Okay, in that leg to the upside, we saw momentum exhaustion. Now we came up kind of flat, right? But we are falling. So what could happen going forward? We could easily just drop a trend line over here, okay, and see this trend line as a potential support level. We can also call the 50 level reset, if you may, because typically what happens when markets are in upside movements, as we have seen, of course, here, is that these lines typically hold. So if we are to see Euro USD continuing higher, we would prefer to see a reset of the 50 and then further continuation to the upside. Okay, so if that happens, what would um, we like to do? We like to long that position, right? So we can assume a rejection and probably a move a little bit further down in the momentum would probably give us an entry perhaps at the previous low over here, right? So let's say 116.25 would be an entry. We want to play this in the short term, so we would put the stop just below the previous low and go and target the previous swing high at 116.69, where the harmonic wave see the second wave of harmonic wave actually formed a top. So yeah, don't forget the RSI is rising. Okay, not yet showing really on the overbought conditions. We are close reset, so this is more of a pullback entry in my mind, and that gives us room for another leg up even in the short term. So if we do get the break above 116.69, look for push towards 117.28 and possibly even 118.22. Yeah, if momentum holds. Support to watch again remains at well, I would say 115.80 still, right? And then 115.41 in the very short term. We'll look, of course, at the regional support at 116.23, potentially 25 as an entry even. And as always, combine the macro story with key technical levels for the cleanest setups and manage risk around the headline driven volatility. So this is your Think Markets update for today. Enjoy the weekend and we'll speak again next week.